Let's take a look at some charts on Zcash from this week's article on Brave New Coin. So Zcash is a privacy-capable coin. It is not a default privacy coin. It has both non-private transactions and private transactions. Any metric you see in the article or this video, for the most part, excludes private transactions because you can't see what's going on under the hood there. This will skew all sorts of things in all sorts of ways, including but not limited to active addresses, average transaction values, and NVT, probably MVRV as well. But if we compare Zeke to the other coins with privacy capabilities, where we can, it leads in daily transaction volume. Again, I still don't know why. I say this every video. I don't know why Neo has such high daily transaction volume. I don't know why Zcash has such high daily transaction volume. I would expect Dash to have higher on-chain daily transaction volume because there is coin mixing on-chain there, which is why transactions per day and daily active addresses are so high. I don't understand why Zcash is so high there. For the most part, Zcash is in the middle of all of these categories, and you can't see Monero's daily transaction volume or active addresses, and Grin for that matter. So you can't directly compare any of these to any of the other ones, really, because they're so different. I mean, the closest comparison is probably Dash to DCR and Pivx, but you can't really compare Zcash one-to-one to any of this stuff. Just a general overview of what you're looking at. I mean, GitHub commits is the fairest of them all because those are completely transparent for all the chains, and Zcash is also in the middle there. They have a hard fork coming up in November, which will change inflation. It'll change founder's reward to dev fund type thing, whatever the Zcash people are comfortable calling it. At the end of the day, inflation is still higher than many other chains, and for that reason alone, it is difficult to buy and hold it. It's just that simple. If your inflation is 30%, it doesn't matter if you're at the same timestamp where Bitcoin was in 2012. Okay, like that doesn't matter. What matters is in the now, inflation is 33%. That's way higher than BTC in the blue. Sorry, Monero in the blue, BTC in the red. As far as inflation is concerned, those are the gold standards for any proof of work chain currently. Not talking about 5 years ago or 6 years ago, currently. In 10 years, I might come back and say, okay, Zcash's inflation is now acceptable. Okay. But for me right now, personally, I cannot buy and hold it. Inflation is just too high. Dilution risk is too high. Whatever. However you want to rationalize that. Grin is a worse offender here at 70% inflation. It's just really black and white. That simple. If we look at post-November, what the network's going to look like, 80% of the miner rewards are going to miners, 7% to the ECC, 5% to Zcash Foundation, and 8% to hopefully independent grants. Basically, we're talking external people from ECC and Zcash Foundation. If we look at shielded and non-shielded transactions, again, just another fact that you can even look at this compared to Monero tells me that Zcash is less private than Monero. So we know the number of shielded transactions because they are T addresses or Z addresses, whatever the nomenclature is. You can see that on the chain. Not only have transparent transactions have decreased, but so have shielded addresses. So the percentage of shielded addresses looks higher than it ever has been because overall transparent transactions are down. What I don't know is if this specific metric includes all of the shielded transactions or just some of the shielded transactions. Another problem with Zeke is it's so convoluted. It's so difficult to really know everything you're talking about here because there's two types of shielded transactions. I think there's two types of transparent transactions. It's just there's too much going on. They need to simplify everything. It should have always just been default privacy from the very beginning. That's probably where they're headed. They're probably headed to proof of stake. This is years from now. But just there's too much going on. It's unless you're in the community and know exactly what you're doing, it's just too convoluted. Sorry, Zeke people. If you look at transactions per day and average transaction sizes, again, this does not include shielded addresses. Average transaction sizes are essentially flat since 2019, but they're really all over the place in any given moment. They'll go up and down with speculation, with price appreciation. So overall, more so than other chains, this metric is pretty useless just because it doesn't include everything. Transactions per day have also ranged pretty heavily. No real revelations can be brought forth by observing them as far as I can tell. Certainly no week over week increase like there was in 2016, 2017, just ranging And you can say, okay, maybe this is more shielded address usage than non-shielded address usage. I don't know. I don't care. I just know what I'm looking at, and it's not as bullish as it was in 2016, 2017. If we look at the mean block size, this has also decreased substantially since 2018. They've increased scaling on the chain to decrease overall block size, much like Bulletproof Monero. So this would look smaller anyway, but it's the fact that it's like close to zero is a little concerning. You don't want to see your chain die in the dark, as I say. You don't want to see your chain with no activity, no block sizes, just, you know, like ADA or EOS, where it's just X number of blocks per second, but they're all empty. It's like, who cares, right? No one's using your chain. Why should it be worth anything? I feel that partly here with Zcash. I don't know if this includes shielded addresses. It probably doesn't. I don't think that matters either way. But, you know, again, it's not 2017. It's not 2018. We're not seeing increases. That's what you want to see. If you're bullish, it's just black and white, plain and simple. Mean transaction fees are flat, as sort of what you'd expect for an empty blockchain. If fees were increasing here, that would probably point to the cost of shielded transactions increasing. But again, I'm not really sure. There's too much going on here to really tease it apart individually for each metric. A lot of game theory, a lot of guessing, basically. Active addresses, again, down since 2018. These, opposed to everything else I've looked at, are increasing pretty dramatically to multi-year highs, which is the most bullish thing you can see. NVT has begun to decrease dramatically. Again, extremely bullish. So to see active addresses increase as price has decreased with NVT decreasing tells me that the market cap has not priced in the on-chain activity that is being observed with these metrics. Again, this would be higher if it includes shielded addresses, which it does not. NVT would be lower if it included shielded addresses, which it does not. So over time, there may be a rising trend line on the NVT as more transactions become shielded. Unfortunately, the main use case for all crypto is speculation, and if shielded addresses are not enabled on exchanges, virtually no one is going to use shielded addresses. Just that plain and simple. Very few people, percentage-wise, have their own nodes for anything, have their own specific coin wallets for anything. Most people keep it on exchanges. Some people use hardware wallets. So if private transactions are enabled on hardware wallets, which I believe they are, there will be a step in the right direction. But until exchanges enable this stuff, which they will have a hard time doing for regulatory reasons, the same reasons they don't list Monero, there's all these little caveats for privacy coins. There's regulatory issues, there's the community, there's uninformed people not knowing what they're using. All this stuff plays into the on-chain metrics, which may or may not be readily apparent upon viewing them. If we look at MVRV, another one of these on-chain versus market cap metrics, what I've generally been saying is anything above 1 for Zcash specifically has pointed to overbought conditions. You can see it was above 1 here, above 1 here. Now it can trend above 1 for quite some time, as it did through 2017, 2018. But for the most part, it's been rejected at 1, just like it was here. Another thing to watch for is a bearish divergence in MVRV, which isn't something you see very often, but when you do, it's worth paying attention to. So here we had a higher high in price, a lower high in MVRV, which says price is being pushed mainly by speculation and not on-chain demand. That's how I would read that. And sure, this is hindsight, whatever. Don't care. It's this is what you're looking for in the future if you're sort of uncertain if prices are going higher. So recently hit 1, pulled back. It's now around 0.75, something like that, 0.71. So for future bullish moves, I would look to this again. And if price is moving up with MVRV moving down, then it's a bullish divergence. And you can say, okay, price is not properly evaluating on-chain demand and price should be higher. Zcash is a proof of work coin. And in June, Bitmain released a miner. And if this number is real, it's pretty insane. It's one of the highest profitabilities I've seen for any proof of work coin that's more than 2 years old. So if I'm a miner and these numbers are real and I have a bunch of them, I'm getting some fat bank per day. That realistically what I'd be doing is locking in those profits unless I'm a Zcash community member. And this is with any proof of work coin. Just based on anecdotal evidence, miners love to trade and they're not very good traders. So it's They tend to hedge places. They tend to sell the bottoms, buy the tops often. Just something else to consider. But if you're a miner with 4 cents or less per kilowatt hour of electricity costs, you're doing really well with the latest Zcash ASIC. Better than Ethereum, might I add, which is pretty interesting. And all the ASICs that are available for Zcash are in profit at 4 cents per kilowatt hour. And if you look at the hash rate for Zcash, it's no surprise that with a new miner and extremely profitable miners, hash rate continues to increase. Difficulty also is increasing in the new era since they changed block times. So this is bullish for any proof of work chain to see hash rates continuing to increase and profitability high, new miners being created by ASIC developers, that sort of thing. There reaches a point though where mining is almost too profitable because then it's just auto dumped on the market. So it's a give and a take. It's a yin and a yang. This is Google Trends for Zcash, which have been flat since late 2017, basically. And if we zoom in past couple of years, nothing too exciting. Some spikes up here recently, probably for price-related reasons, but overall it's just been flat. All right, if you look at technicals, Bitfinex long shorts, VPVR, RSI, volume, yearly pivots, 50, 200 EMA. So the first thing that smacks you in the face is this massive VPVR level at 50. 50 is a psychological support, just as 100 was psychological resistance. The second thing that smacks me in the face is this harmonic, which I didn't include in the article because I'm not super convinced that they're really actionable most of the time. But this is a bearish harmonic, so it pointed to down. And once you have 3 points here, you can guesstimate where the 4th point would be and size into a short position appropriately. These typically run 50% to the downside or to the second point, which would be, I don't know, 60%, 80%, whatever it is. It's difficult for me to think that this gets below 50 anytime soon, but 50 is definitely the big level, and I'd watch for a bullish divergence if we do get a lower low here with a higher low in RSI. 50 to 200 will likely cross bearish over the next few weeks, even if price stays sideways, which is fine. I mean, it says potential bearish momentum will increase, but it also says the trend just basically reset itself, which pretty much everything needs to do in crypto, as it's been up, 200, 300, 400% since March. Reconsolidation is fine. Bitfinex long shorts are extremely net long, so if this does go low, there could be a bit of a long squeeze. Now, this could be Zcash miners who are selling spot and buying futures, which would be interesting. I don't know any Zcash miners personally, but one possibility there. I don't think that's the case just because a lot of the altcoins on Bitfinex, their long-short ratios are extremely long recently, but maybe I'm wrong. But overall, there's no real trade here that I can see. As far as setups are concerned, on the cloud, the trend is definitely bearish below the cloud. TK cross is bearish, cloud is bearish. Everything's going to stay bearish until it's back above the cloud. And then ZBTC has mean reverted back to this median line of this bearish pitchfork. There's a lot of bullish support here at around 4K sats. So I don't expect all-time lows anytime soon. Just a reconsolidation at this median line. But this is, again, another example of the power of the pitchfork painting this trend for you, painting the expectation of a return to mean continually, so long as price isn't above the bearish pitchfork to invalidate it. So price didn't break 01 on the way up. So the expectation the whole time is a return to mean. Here we are, back to the mean. So overall, I'm not too bullish on any Zcash technicals or fundamentals. There probably will be some speculation increasing, probably leading into the November stuff. It's hard to say, just because, again, inflation's so high, mining's so profitable. If I'm a miner, I'm just mining the crap out of this thing and dumping it on the market because mining profitability is so high. So that's going to damper upside potential in the near term. But it'll be interesting to see how the network looks after November.